Hello and welcome to the Carrier Update brought to you by PowerFleet. I'm here with the one and only Donnie Gilbert. Donnie, what do you have for us?
Good Monday morning, Anthony. We're looking at volumes here first. We're going to start out and see what's been changing over the weekend here. First here in the blue line here, we have drive-in outbound tender volumes here. They're holding steady at 10,941, which is kind of between that, 10, 8, and 11,000 that we've been kind of looking at here over the past several, 2 or 3 weeks here. So pretty steady. Demand's still high for drive-ins, but it's been very steady. Looking at the green line here, this is reefer outbound tender volumes. And you can see here over the past few days, it's actually been picking up here just a little bit. So that's one to kind of remember here is reefer here. It's picked up to 1860, so back above 1800. So this is kind of closer to one of the higher points that we've seen going all the way back to that peak that we saw back here at the 4th of July. Let's swap over to the next chart here and look at rejection rates now. So we have demand that's been very high. Drive-in, we've seen a little bit of pickup here through August, not very much. It's gone from 21.5% to roughly 22.39. So a little bit of a pickup, but not too much. But you saw here as reefer volumes picked up, we have reefer outbound tender rejection rates. They picked up to 32.17%. So that's almost a 2% increase right here. And it's still kind of trending upwards right now. So this is a good sign for reefer right now. You can see it's kind of very close with the volumes. You see the volumes react, then you see the rejection rates start to react here. Where drive-in's been, really steady here the last several days. So definitely reefer the one here to keep an eye on. If we swap over and kind of look at what's changing, I like to look at a US reefer map here on the next chart. It's the 1 week change for outbound tender rejection rates for reefer. And you can see there's some blue, but there's not a lot of blue. Southern California's got a little blue. Up here in the Midwest here, this is where most of the changes are happening right through here. And then of course in the Southeast, you have a lot of the markets that are trending down here in the Southeast. Produce season we're past the peak season. Produce season is winding down in a lot of these states here. And a little bit of blue up here in the Buffalo, New York area right through here. Now, this is a US map. I like looking at this because it kind of shows me the regions and where everything is blooming. And you can see they're in 2 or 3, 4 spots here. Swapping over and looking at this on a heat map on our next chart here, you can see here right behind you, Anthony, this is the 1 week reefer change, but it's a heat map. So the actual first number there is our change. It's the actual what is changing from 1 week to the other. So it's not the actual rejection rate. So some of our highest changes, Eau Claire, Minneapolis, St. Cloud, a lot there in Minnesota, Bowling Green, Kentucky, Nashville, Tennessee, Green Bay, Wisconsin. You can see these are kind of isolated, in that Midwest area and the Northeast. So breaking it down by using your heat maps and then sorting it by the number, you can see the highest numbers. There's some good ones in here. I say Buffalo, Rochester, Syracuse, Quincy, Ontario, California is picking up. Los Angeles is picking up. And you can see here in Los Angeles and Ontario, an 8% pickup from week to week. Those are very large markets. That's a very significant impact on these changes. So this is always a real good one to look at and see what the actual numbers are on the changes. Now, on the flip side, I've resorted this here on the right to the lowest numbers, which is giving us our largest declines from week to week. And you see here, Columbia, South Carolina, Cleveland, Ohio, Taylorville, Illinois, Toledo, Ohio, Houston. There's a lot of bigger markets in here. Omaha, Tifton, Georgia, Macon, Stockton, Columbus, Ohio. So here's a lot of that what we saw in the red there that are starting to trend down. So not so good for these guys, better for these guys when it comes to the carrier perspective. So we understand what's going on, what direction the markets are going.
So Donnie, looking at those, back on a few charts, looking at those rejection rates, that was something that you really expected happening even last week or a couple of weeks ago, is that right?
Yeah, and there's a couple different things going on. Let's swap over to the next chart here and look at what's going on with the actual contracted rate increase. And that's one thing that we've kind of seen. This happens a lot in July because these new contracts coming into place. It's also the end of the summer season, and there's kind of just a dullness in the markets between July and maybe mid-September into September as we get through that little changeover period. People are going back to school. They're not going on vacation as much anymore because kids are going back to school. So we kind of get in that dull area. But you can see here in the blue line, what I've got here is the reefer contract, initial reporting of the average rate base per mile. And I've got this on a seasonality. So we're looking at 2021, 2020, and 2019. And you can see here over the past month and a half here, we've had an upward trend. It's been elevated, starting to pick back up again as we get through July, meaning contracted rates are picking up for reefer carriers when they were signing those new deals. Now, it's been, for the most part of the year, it's been below the last previous 2 years, and it's just now picking up and it's above 2020. 2019, it still has a ways to go. So reefer still has a long ways to go to recover over the past 2 years. It's been a rough few years for them, but they're picking back up. They're up to $1.96 rate per mile right now, so that's good. So they're on the upturn, and this is going to be one of those that pushes those rejection rates down a little bit right now as they fall back into compliance for this short period of time. So as we see this go up, I got it actually on my next chart here. As we see the contracted go up, we see here in the blue line, this is my rejection rates for reefer. This is going down, but we still have rate per mile going up here in the green line. So we have two things going on. We have carriers falling back into compliance, pushing rejection rates down. Now it's only down to 32.17%. So this big decline looks very big, but we're dropping from 50% to 30%. We're still very elevated at 30%. And you also still have rate per miles going up. That's because we're still at 30%. So while carriers are falling back into compliance, there's still very high rejection rates and there's still a very hot spot market. So that's what's going on. That's kind of we see that divergence right now.
Got it. So, Donnie, thank you so much for this update. We're going to have to check back in with you because this was a ton of amazing insights. We'll be sure to get back with you here in just a few moments.